What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we'll be talking about the Bitcoin price chart, which has a slight pullback today to $63,800 after uptrending for the last 2 weeks, getting as high as a little bit over 66,000. Meanwhile, the altcoin market cap also having a slight pullback in here after at the end of last week being able to take out the high that was set over there on August 24th. The million-dollar question everybody is arguing over right now is whether or not this range is just going to keep going on for forever, or is there actually any substance to this one this time? The last couple of weeks have pointed to a couple of different things I've been looking at in regards to how the whole market structure has been for the altcoin market, pulling back to the preliminary support, which is based on an idea that was hypothesized back in November of last year that we'd hit the 702 retracement and come back to the preliminary support, which is where we have been here for the altcoin market and where we've been bouncing from ever since that big move happened back there on August 5th, where we even saw a massive spike happen in the VIX on that day. For Bitcoin, that's also the biggest day where we saw the intraday selling volume, followed by the biggest day of intraday buy volume happen on that day, August 5th. And of course, that VIX spike is the highest one that we've seen since C19. And so everybody's in debate right now, right? Is this thing any different from these past ones? Lower highs, lower lows, and that's really just kind of been the trend going on in here. One of the things I've been pointing to has been the difference that's shown up in the breadth. And we talked about this last week, and the breadth is going to refer to whether this is a broad-based rally or if this is a consolidated rally like we're seeing over there in the stock market, where it's only 11% of assets that are propping up the major indexes, whereas things like the Russell 2000 and 401k accounts are not taking off. So things we look for is to see, hey, is this broad-based? Is there a different dynamic happening in the market? And you may have noticed over the last couple of weeks, several days where lots of assets are up 7 or 8% in a day, and you reflect back on the last 6 months, and there were really no days that were like that the whole time. Anytime there was rallies, maybe you'd had one or two where that were doing something like that, but the majority of the market would be like 1 to 2%. But these last couple of weeks, there's been a lot of 6, 7, 8% and lots of assets doing that at the same time. And so I've spent a lot of this weekend trying to modify down this indicator so we could still just look at it on the daily time frame and not have to swap between 2-day time frame, 3-day time frame, and just say, here's the 1-day time frame. Let's try to look at it with as few false signals as possible. So really tightening it up, making the restrictions a lot more difficult on this indicator to show when is the breadth actually opening. And this is kind of where I've landed here with this on-off switch of breadth opening and breadth closing down here on the bottom. And things that we can notice is that the breadth just dies all here throughout 2021 to 2022, and there are no false signals that imply a bottom is in or that the breadth is opening up in the market. We finally get that signal to start here in January that the dynamic of the market is starting to finally change. Then what do we go through? If you guys recall who were here, the cruel summer, the ABC that takes place in there for our cruel summer back in 2023. Then the breadth really opens up there in October of 2023 with the Russell 2000 bouncing off of the lows. Then we get one more last push of open breadth happening here in February into March and April, right? Then the breadth dies after hitting the 702 retracement, and it never opens up ever again. With every bounce that happens in here, the breadth never opens to say this is broad-based or that the dynamic has changed until now. So we could see here in the last several years, there's no false signals that end up happening in here. Now, we can go back to 2020. So we can go back 4.5 years ago and look at what it was like prior to COVID. And that's really as far as I can get this thing to go back with Binance and tracking all of these different assets. The breadth did open way up before COVID happened. And this was essentially an A, B, C. Now, whether there's a way to tighten this thing up even more to make it to where if this thing flashes without that signal, I'll see if there's a way. However, with every single thing since COVID, anytime the breadth opened, we were rallying in this market. The one circumstance it didn't was 4.5 years ago with COVID. But it has given no false signals in 2022 and no false signals in 2023 or 2024, and accurately determined that we were not ready to be able to do anything in this market. However, it is implying the dynamic of this market is changing right now. The market has shifted into more of a broad-based rally now that we have seen big volume of both selling followed by big volume of buying over here mixed with the giant VIX spike in broader markets at the exact same time, which also comes from being back at the preliminary support after what was hypothesized as the 55% correction, ends up hitting 58 after that VIX spike. And now we have an opening of breadth, which has not falsely triggered in 2021, 2022, 2023, or 2024. So, of course, everybody's looking at this Bitcoin move and just saying, hey, how do we know it's not just going to keep going on for forever? Well, the thing that is interesting about this particular move is it's coming off of a big VIX spike back in August, a big volume spike on Bitcoin from back in August, and this rally is more broadly participated in, as implied by the opening of breadth. But the question is, if that is the bottom, then what would price action look like from there? The original idea considered is that it would be more like the crash, retrace, reaccumulation as pictured here, that you get something more along the lines that looks like this, back to the range boundary, and then eventually go. However, when you're in a range like this, you can produce many different range structures. It even can be very similar to what we saw back in here, where this can just ABC in here and then ultimately lead and end up going. Both of these are very common range structures, and we've seen crypto do both of them. I can actually even show you both of them on the exact same chart for those who were here during the 22.5 cent days of XRP back in 2020, and for those who were here during the SEC sell-off and then the laserized diamond hands of 2021. This is your lower accumulation. This is your crash, retrace, reaccumulation with a third range boundary test first. That is a much broader, wider range of accumulation. In both of these, they are pulling back to preliminary supports of their previous ranges that they broke out of, and then both of them ultimately lead to go on to do extensions. Something like SWI has already gone all the way back to the third range boundary. Again, reiterating that this move is clearly different than this move, or this move that has happened here for Bitcoin, right? This one, the breadth opens up, and instead of continuing to march down, this one, boom, breadth opens up and it goes back to the third range boundary. But everybody's arguing left and right. Is this one going to do it? Because, well, what did everybody think? That this one would do it. This would do it. This would do it. Now it's like, fool me once, shame on you. Fool me twice, shame on me. Fool me a third time, fool me a fourth time. Come on. No, this goes on forever. However, dynamics have changed, and we have seen some life breathe back into the market in this moment. But the thing that I definitely still just consider here and think about is, what could the range look like? Will we ABC from here, or hit the retracement third range boundary ABC from here? These are the two that I deem the most likely. If it is something different, it would just be something that I didn't see. But these are very common. And ignore the timing that you see here on there. It's really just structural. I mean, you can make these things happen very quickly. You can make them happen very slow. SWI obviously has gotten back here very quickly. And one of the reasons I wouldn't be fooled by something like this happening, where it just kind of continues ranging in here, like we're talking about with this, where it's like we're kind of like right in here, is because of the grind that we had to take to get down here. My original thoughts were we would get there very aggressive. I was really worried that it would happen very quickly. And that's why I was so vocal in March and in April, thinking it would happen really fast in that type of circumstance, ultimately leading to a crummy 2024, which is discussed in this video, that, hey, it would be pretty scary, pretty aggressive, and then ultimately lead to a crummy 2024 as a range would continue building. But that's if you had one that was more shaped like this, right? Where it gets out and then boom, it takes it all back really fast. And that's what I was really worried about back in March and in April, that we were going to see something like that. So when we got the big massive liquidation back in April, my thoughts were like, hey, maybe that was it. There we go. That was huge. However, I know we shouldn't be taking this out unless if we're doing something different, which is why stop losses all got placed right in there. That should be our range boundary test if that was it. But ultimately, it makes a much more controlled lack of breadth grind down, as if it's more in the structure of something like that. And really, you get yourself placed more in an area like that currently right now. You've kind of ABC'd yourself back up in here to the height like so. We see the breadth opening. And what we know, when we did exactly that back in here, the breadth opened as well. It marked the low. The bottom was in. The market was improving, but there was still some working out that had to happen before it would get going. In no way does this insinuate it's a long process. But, are we halfway? Are we halfway through all that? Or it's more like 1, 2, 3, 4, 1, 2, 3, 4, 5, back to wave 4 within wave 5 for 5, 6, and 7, back to wave 6 to ABC, and then ultimately gets up, and there is no third range boundary retest, right? Due to that long duration, rather than something so violent as worried about in March and April, I wouldn't rule it out as a possibility for how a range could build. And I don't think either one of these ranges or these discussions I'm having right here, right now, is going to be received positively by really anybody. There's team up, there's team downs, there's no team sideways. And that's why everybody is psychologically just beat up during this time right now, because what is this? Sideways. And what do people tend to do? If it's going up, it's going to keep going up. If it's going down, it's going to keep going down. If it's going sideways, what is it going to do? Keep going sideways. And so I think that's the psychology of where the market is at right now. But I think there was a dynamic shift that did happen in here in regards to a bottom forming, seeing some assets already go back to their third range boundaries. Now we're just in the really complicated part of trying to figure out structurally what will it look like. Will we go back to the third range boundary, then ABC, or do we kind of ABC from here? And then there is no rejection from the third range boundary, and it actually gets through next time. Now, ultimately, that's really where my thoughts are at right now on how this is working itself. And it's the way I'm playing the market currently right now. That ultimately we are building a range, and my thoughts are we'll likely go see a 3.618 to a 4.236 extension of this range. Just the manner of how we're going to get there first to ultimately be able to do it. Well, we're all waiting on the market to tell us that right now. But what it's flashing is signs like this, that like you're coming off of the lows and that you do ABC, or signs that things are moving. But the really great thing about this is that at no point during 2022 did we see breadth open, and it accurately determined there was really no reason to get excited at any point for the last 6+ months. And right now, everybody arguing, do we go sideways? Fool me once, fool me twice, fool me 3 times, shame on me, shame on you? Or is life finally breathing back into the market? And it does appear life is breathing back into the market. And we can just see that on various assets that have done little breakouts already back to third range boundaries. The thing that's always going to sit there in the back of my mind, of course, still to this day, is that we talked about C19, retracement, ABC. That Bitcoin's whole move was nothing more than a glorified retrace in here. And the amount of time we've spent in here ultimately then led to C19. And we did see breadth open up in that moment, in that last rally before C19, which of course would once again re-solidify this was never a bull market in the first place. This whole thing that happened in October through April, all of that was just a retracement of the market. However, I'm willing to place my bets to say that it's more something like that rather than C19 being on the horizon. And on September 19th, I made my entries into the market right here. And the bet I am placing is essentially that I've bought the market right here. What I don't know is, of course, if something like C19 would happen, but I'm operating under the guise that we've reached our range low. We're now going to range this thing to try to shoot it out. And what I don't know is if we'll get all the way back up here and it'll be like this and have to wait. And if we'll get that low before it could end up going out, doing some type of move that would be more along the lines of that. Or if we're going to hover around the lows just like so. And for that, it seems like a reasonable place for me to go ahead and do it. Like everybody, of course, you buy the market, you want the market to shoot straight to the upside. And the same is true to the other way, right? You sell the market and like you make a bunch of profit, but is that good enough? No, you want the market to go down and be validated right away afterwards, right? It's a weird psychological thing that everybody goes through. So you don't experience FOMO and then regret what you did, right? But I am going into it with the mindset of buying range lows. We've experienced the 55% or 58% pullback that has happened over here in the market. I think it's reasonable. We go back to retraces and then work our way out. But also, due to the structure we did to get down here, rather than it being super violent, that it's also very reasonable to think it could A, B, C in here to get out. But ultimately, the mindset I'm bringing here when we're going to be talking about the market on this YouTube channel right now. Like, so you understand clearly, what is the vision that I'm looking at it and the lens that I'm looking at it through. I'm looking at it through the lens that this is a large range. We have gone down an appropriate amount that you would expect for a back test of a 1.5-year resistance level that has now been back tested with a high VIX event and high volume and breadth is opening here. My vision is that we are going to build a range, and I'm targeting to try to get a full extension of the current range that we have right now. That is what I'm trying to do. And that's the angle I'm looking through the market. The thing that will always be in the back of my mind and have me worried about will still be C19. It will still be there. That worry will still be there. But the way I'm playing the market right now is that we have a move like this come next. How long it's going to take, I'm not quite sure. I totally, 100% unequivocally believe the Russell 2000 has to break out in order for that to happen. And likely they will occur at the exact same time. But my vision will be to try to get up in here. However, after we get into these price areas, I will think that we are going to crash violently afterwards. And that line is not appropriate. I'm just being dramatic. But along the lines of something like that or something like that, where it gets up into these extensions and then it is over. So kind of giving you a clear view of how I'm looking at it right now. I think we've reached our range low. I think we're accumulating the low. The breadth has shown up in here as it should. We're working on what the range is going to look like, ultimately looking for a full extension in here, or at least a 3.618. Now, in the event that a surprise comes and it's C19's up in here and the breadth is opening because we're doing a big fat B leg to smash into the lows just as we did for Bitcoin back in 2020. We would likely see an absolute bloodbath throughout the cryptocurrency market. However, rather than targeting this range and going for something like 1 trillion even, I would actually target the entire range at that point and be targeting closer to 1.8 to 2 trillion as we full extensioned in here. The way I'm placing my bets is that this is not going to happen. I'm placing my bets that it's more along the lines of this, but I already know it's going to just be real hard for me to shake that until it proves itself that it's out. But of course, one thing that would definitely make me feel better is if this guy just stopped teasing us for 86 years and just started expanding. Boy, that would really relieve a lot of the worry or the thoughts on that topic. Otherwise, things that we're looking at last week, we're talking about gold, looking for gold to pull back. It has, so it's at 2630, right? There's such an inverse relationship between gold and the cryptocurrency market. We're checking to see, hey, is that sign of that breadth opening a sign of gold topping? And well, at this point, it's hit 2685. We're at 2630 right now. Hard to celebrate too soon just yet, but it had hit full measured moves as we talked about last week. As for XRP had its highest weekly close yesterday of the entire year of 2024. It has not closed that high since December of 2023, and that actually was above the 702 retracement on this most recent range. Whether that means anything or not to do that, I don't know. This range has obviously still continued to go on, and we can argue larger aspects of this range. But it's interesting when we look at it from like the monthly time frame, because we're going to be closing out the month today, and we'll see how things go when we get to the end of today. Probably some volatility today, because what is today? It's September 30th. It's the last day of the month, but it's not just the last day of the month. It's the last day of the third quarter. So we'll see if we can get a higher close happening over here and get the highest quarterly close for XRP and for various assets. But certainly nice to see price action happening in here, and that we're likely going to have a green close to the month of September. And I do remember real clearly last year, lots of discussion that September would be red. And everybody really worried last year that September would be red. I think even the title of my newsletter at the end of September was Against All Odds, Crypto's Green September. Yes, it was Against All Odds, Crypto's Green September, which we had already, if you guys remember back then, the spiciness. I think that's where spicy started. It was back there in September, arguing that capitulation had already happened in here, and everybody was looking for lower prices there in September, because September is always red apparently. But of course things ramped up. So here we go. Wrapping up September, another green month over here. For September, that's 2 in a row. And well, fingers crossed, October, November, and December can be a repeat of what last year was as well. But on that note, wanted to fill you in on what I'm seeing when I look at the market, how I bought the market, the vision I have when it comes to that, and my forward-looking vision as well. I went with the approach of buying 20 coins to create like an ETF style basket. I've talked a lot about that type of stuff over the last year, looking at it through the lens of like developer activity, total value locked, NFT activity, developer growth, percentage drawdowns, and utilize all of those different things. I've shared a lot of that stuff here on the YouTube channel. I really went diving through DeFi Llama, CryptoSlam.io, Santiment.net, and developerreport.com to try to pin them all against each other and make those decisions. The hard thing about 2021 is that only 22% of the top 100 went into new all-time highs. So we've spent a lot of time this past year trying to figure out what metrics mattered. And it was all of these. And the nice thing is all of these websites are free. You can see development scores on Santiment for free. You can check out total value locked for free on DeFi Llama. You can check out NFT volumes for free on CryptoSlam.io. And of course, read all the developer activity stuff over there on developerreport.com. And this may sound like an infomercial. And no, I'm not sponsored or incentivized by any of them to tell you any of that. It's all free. So will I do better than the market? I hope so. I've spent countless hours going through all this stuff about developer data, the odds of new all-time highs based on percentage drawdowns, the inflation rates and those impacts on their all-time highs, and looking at user activity levels when it comes to TVL and NFTs. So obviously it's the last day of the month. I've told you guys I was buying the market. I told you guys I was doing a write-up on it. Those are all the factors that I took into consideration. And I went into the most in-depth newsletter that I've ever done in my life, coming out at an hour and 14 minutes long. As I was writing this document, it was 90 pages long. Probably the most exhausting one I've ever done. As a matter of fact, I know it is. I'm super happy it's published and done. And I'm glad to be beyond that and just pulled the trigger on it on the 19th. So you can, of course, check that out over here. I dive into all those different data points and why I picked the ones that I did. You know, simply speaking, of course, it should be no surprise. High development, high total value locked. Those are all super important in there. But, you know, having to really kind of go down the rabbit hole a little bit further on a lot of these to get a lot of those extra spots filled. So again, if that's not your thing, all these websites are free right here. You can dig around these for yourself at DeFi Llama, CryptoSlam, Santiment, and developerreport.com. These are the sites that I use to dig through. They're awesome resources. Just go dig through them for yourself. The reason I like this stuff so much is it shows me some of the mistakes I've made in the past and being like, ugh, I would have never picked that now. So you could check out all those things for free. But if you want to see the things, of course, that I went with a long report writing up why, you can check that out at blockchainbacker.substack.com. And I'll tell you a couple of them just so you guys know. Yes, there's Bitcoin. Yes, there's Ethereum. Yes, there's XRP. I do think we're ranging right now. I'm not fully convinced I have the best entries on everything right now. There may become better entries available if we're just going to range down here for a month or two. But like I said, I showed you why I made the buy, where I did, and now I sit back and wait. So the 58% crash has happened. There was high volume there. There was a high VIX event on August 5th. We see the breadth opening up throughout the whole market. These are typically good signs. So take that for what it is. All right, I'm wrapping it up. Thank you guys so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.